Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy. In today's video, we'll be discussing 50 plus questions and answers related to the topic accounting equations. The video is divided into 5 sections. Number 1, multiple choice questions. Number 2, true or false questions. Number 3, short answer questions. Number 4, fill in the blanks. And number 5, problem solving questions. So sit back, relax and watch and learn everything about accounting equations. The video will provide you ready to use exam notes and question data bank for teachers and tutors to prepare examination question papers. Let us start with multiple choice questions. Question number 1 on your screens is, what does the accounting equation represents? And the options are option A, revenue minus expenses, option B, assets are equal to liabilities plus equity, option C, equity is equal to assets plus liabilities, and option D is equity is equal to assets minus liabilities. And we all know the answer is B. Assets of a business are always equal to liabilities plus equity. Another way of representing an accounting equation is displayed on your screens. That is, equity is equal to assets minus liabilities. Question number 2 on your screens is, if a company has assets of $500,000 and the liabilities of $300,000, what is the equity? The options are option A, $200,000, option B, $300,000, option C, $500,000, and option D, $800,000. We know that the equity is equal to assets minus liabilities. So therefore, the answer is A, 200,000. Question number 3 on your screens is, which of the following is not an asset? The options are option A, cash, option B, inventory, option C, accounts payable, and option D, equipments. We know that cash and inventory are current assets and equipment is a fixed asset. Therefore, accounts payable is not an asset. Question number 4 on your screens is, what increases equity? And the options are option A, liabilities, option B, revenue, option C, expenses, and option D, drawings. We know that the liabilities, expenses, and drawings will decrease the equity. Therefore, the correct answer is option B, revenue. Question number 5 on your screens is, if liabilities increase by $500 and assets remain unchanged, what must happen to equity? The options available are equity will increase by $500, option B, equity will be unchanged, option C, equity will decrease by $500, and option D is it cannot be calculated. We know that assets are always equal to capital plus liability. Now in this example, liabilities have increased by $500 whereas the assets remains unchanged. Therefore, the capital or the equity must be reduced by $500 in order to ensure that the right hand side of the equation is equal to the left hand side of the accounting equation. Therefore, the correct answer is option C. It will decrease by $500. Question number 6 on your screens is, what does the accounting equation represents? The options are option A, assets plus liabilities is equal to capital, option B, asset plus capital is equal to liabilities, option C, assets minus liabilities is equal to capital, and option D is none of the above. We know the option number C is the correct answer. Assets minus liabilities are always equal to capital. Question number 7 on your screens is, an amount withdrawn by proprietor for personal use will dash the capital and the cash account. And the available options are option A, cash and capital will increase, option B, they will decrease, option C, there will be no change in cash and capital, and option D is none of these. Now the correct answer is option B. Let us understand this transaction with accounting equation. Cash withdrawn by the proprietor will reduce the cash, which is an asset, and the drawings will reduce the capital. Question number 8 on your screens is an increase in one asset is accompanied by, and the options are option A, decrease in another asset, option B, increase in liability, option C, increase in capital, and option D is all of these. Before answering the correct answer, let us understand this transaction with the help of an accounting equation. Now, if the asset is increased, the accounting equation will be balanced if another asset is decreased by the same amount. Another option could be if the liability with the same amount is increased. And the third option could be the capital is increased with the same amount. Therefore, in this case, option D is the correct answer. Now, question number 9 on your screens is decrease in one liability may lead to, and the options are option A, decrease in assets, option B, increase in another liability, option C, either A or B, and option D is all of these. The correct answer is option C. Let us understand why option C is the correct answer with the help of an accounting equation. If one liability is decreased, in order to balance the accounting equation, either another liability with the same amount should increase, or other option is the asset with the same value should decrease. Therefore, option C is the correct answer. Let us now attempt true or false questions and answers. Question number 10 on your screens is the accounting equation must always balance. The answer is true. Assets of the business are always equal to capital plus liability. Question number 11, equity is only affected by owner's investments. This is a false statement. Equity can be affected by the profit or loss of the business. Question number 12, an increase in assets always results in an increase in liabilities. This is a false statement. Liabilities will increase only when the assets are purchased on credit. When the assets are purchased on cash, the cash which is an asset of the business will be reduced. Question number 13, the accounting equation can be presented as equity is equal to assets minus liabilities. This is a true statement. This is another way of presenting the accounting equation. Equity is equal to assets minus liabilities. Question number 14, expenses decrease equity. This is a true statement. Question number 15, decrease in one liability may lead to decrease in another liability. This is a false statement. Liabilities decreases when they are paid. Therefore, when liability decreases, it decreases the asset being paid by cash or by bank. Question number 16, purchase of goods on credit means increase in assets and liabilities. The answer is true. When the assets are purchased on credit, both the assets and the liabilities will increase. Question number 17 on your screens is purchase of furniture for office will decrease the capital. The statement is false. When the furniture is purchased, the assets of the business will increase. If the furniture is purchased on credit, the liabilities will increase. If the furniture is purchased on cash, the cash of the business will be reduced. Cash is again an asset of the business. Question number 18, sale of machinery at profit will increase the value of the asset. This is again a false statement. When the machinery is sold, the value of the assets of the business will be reduced. The asset value will be increased with the proceeds received from the sale of the machinery, either in cash or in the bank account of the business. The profit earned on the sale of the machinery will increase the capital of the business. Question number 19, payment of creditor will reduce the assets and the liabilities. This is a true statement. When the liabilities are being paid either by cash or bank, the assets of the business will be reduced and so as the liability. Question number 20, drawings will reduce the liability and the capital. This is a false statement. Drawings will reduce the capital and the assets of the business and not the liabilities. Question number 21. Prepaid rent for 3 months will reduce the capital. This is a false statement. Prepaid rent will reduce the cash or the bank balance of the business, which is an asset, and at the same time, prepaid expenses being the assets of the business will be increased. So the impact of this transaction will be only on the assets of the business. Question number 22. Depreciation charged will reduce the assets and the capital. This is a true statement. The depreciation charged will reduce the assets of the business, and as a result the profit of the business will also get reduced, which will impact and reduce the capital of the business. Let us now attempt short answer questions. Question number 23 on your screens is define assets in the context of the accounting equation. The answer is assets are resources owned by a business that have economic value. Question number 24. What role do liabilities play in the accounting equation? The answer is liabilities represent obligations the company owes to the outside parties. Question number 25. How does net income affect equity? The answer is net income increases equity through retained earnings. Question number 26. What are the two main types of equity? The answer is contributed capital and the retained earnings. Question number 27 on your screens is what happens when a business takes out a loan? The answer is liabilities increases and the assets also increase. Question number 28. How do dividend impact the accounting equation? The answer is dividend decreases the assets, that is the cash, and it also decreases the equity, which is the retained earnings. Question number 29. Which transaction decreases one asset and increases another asset? The two examples are amount received from the debtors and second is cash deposited in the business bank account. Question number 30. Give an example of decrease in an asset and decrease in a liability. The answer is cash paid to the creditors. When the cash is paid to the creditors, the assets of the business will be reduced and so as the liability of the business. Let us now answer few problem solving questions. Question number 31 on your screens is if total assets are $750 and the total liabilities are $450, calculate the equity. We know that the equity is equal to the assets minus the liabilities. Therefore, the answer is $300. Question number 32. If the liabilities are 100,000 and the equity is 50,000, what are its assets? We know the equation. Assets are equal to liabilities plus equity. Therefore, the answer is assets are equal to $150,000. Question number 33. A company acquires equipment for $200,000 and finances it with a loan. How does it affect the accounting equation? The answer is assets will increase by $200,000 and the liabilities will also increase by $200,000. Question number 34. Company issues a capital of $10,000. What will happen to the accounting equation? The answer is assets will increase by $10,000 and the capital will also increase by $10,000. Question number 35 on your screens is if a business pays off $30,000 liability, how does this transaction affect the accounting equation? The answer is assets will decrease by $30,000 and the liabilities will also decrease by $30,000, keeping the equation balanced. Question number 36 is if closing capital is $250,000, drawings during the year are $4,000 and the profit during the year is $8,000, what will be the opening capital? The answer is opening capital minus drawings plus profit is equal to the closing capital. Therefore, the opening capital will be $246,000. Question number 37 is if the owner's equity is $20,000, liabilities are $12,000 and the stock is $5,000, what are the total assets of the business? The answer is assets are always equal to liabilities plus equity. Therefore, the total assets of the business will be $32,000. Let us try few fill in the blanks questions. The question number 38 on your screens is when a company earns revenue, it increases dash and subsequently dash. The answer is assets and equity. Question number 39, if the owner withdraws funds, it decreases dash. The answer is equity. It decreases equity. Question number 40, the accounting equation reflects a company's dash at a specific point in time. The answer is financial position. Question number 41, an accounting equation is based on the dash principle. The answer is dual aspect principle. Question number 42, the equity of the owner is called dash. The answer is capital. Question number 43, dash is equal to assets minus dash. The answer is capital is equal to assets minus liabilities. Question number 44, goods purchased on credit will result into dash in assets and liabilities. The answer is increase. Question number 45 on your screens is goods costing $10,000 sold on credit for $20,000 will increase the total assets by dash. The correct answer is $10,000. Let us analyze this transaction. Since the goods worth $20,000 are sold on credit, this will increase the debtors by $20,000. Now, $10,000 being the cost of goods sold will reduce the inventory by $10,000. Therefore, the net increase in total assets will be $10,000. Question number 46 on your screens is if closing capital is $200,000 and the business suffered a loss of $15,000 during the year, the opening capital was dash. Now let us analyze this transaction. We know that opening capital plus profit is equal to closing capital, or in other words, opening capital minus loss is also equal to closing capital. Now by putting the given information in this equation, we will have a revised equation as displayed on your screens. Opening capital minus 15,000 loss is equal to $200,000 of closing capital. Therefore, opening capital is equal to $200,000 plus $15,000 is equal to $215,000. Therefore, the correct answer is the opening capital was $215,000. Let us further strengthen our understanding of accounting equation with few more business transactions. Transaction T1 on your screen is Polly started the business with a cash of $45,000. If we analyze this transaction, the two accounts which are getting affected are the cash and the capital account. Cash will increase by $45,000 and the capital will also be increased by $45,000. The transaction number 2 is on your screens. Polly purchased goods worth $5,000 on cash. The two accounts which are getting affected by this transaction are the stock and the cash, and both are asset accounts. Stock, which is an asset, will increase by $5,000, and since the transaction is settled by cash, cash, which is again an asset, will be reduced by $5,000. The new accounting equation post T2 transaction will have $45,000 as assets and $45,000 as capital. Transaction T3 on your screens is Polly purchased two computers for office use on credit from Cooley for $2,000. If we analyze this transaction, two accounts which will affect are assets, that is the computers purchased, and the second is the creditors, which are the liabilities of the business. Assets, that is the computers, will be increased by $2,000 and the creditors will also be increased by $2,000. Post T3 transaction, the new accounting equation balance will be $45,000 of current assets, $2,000 of fixed assets, totaling to $47,000 of total assets of the business. And on right hand side we will have $2,000 of liabilities plus a capital of $45,000. So Tolly starts a business and had under mentioned business transactions. Transaction T1, he started his business with a capital of 20,000. In this transaction, business has received cash from Mr. Tolly towards his capital contribution. Cash is an asset of the business and capital is the amount which the business owes to Mr. Tolly. Therefore, 20,000 cash being current asset will appear on the left hand side of the equation under the head assets, and 20,000 will appear under the head capital on the right hand side of the accounting equation. At this stage, business holds only cash of 20,000 under assets. Under transaction number T2, Mr. Tolly purchased office furniture for 1,500. Two accounts which are getting affected are first, assets as the furniture is purchased, and second, again the assets as the transaction is settled by cash. Since both the accounts affected are assets, both amounts will appear on the left hand side of the accounting equation. Assets, that is the furniture, will increase by 1,500, and at the same time the cash, which is also an asset, will be reduced by 1,500. Post transaction T2, there is a new balance of cash 18,500 and furniture 1,500, totaling to 20,000 of assets on the left hand side and a capital of 20,000 on the right hand side of the accounting equation. Under transaction T3, Mr. Tolly purchased goods worth 3,000 on credit. Two accounts which are getting affected by this transaction are number 1, stock, and number 2, creditors, as furniture is purchased on credit. 3,000 will appear on the left hand side as the stock has increased, and the liability of 3,000, which has also increased, will appear on the right hand side of the accounting equation. Now the new balance of accounting equation post T3 transaction will be 21,500 cash and 1,500 furniture, totaling to 23,000 of assets on the left hand side and a capital of 20,000 plus a liability of 3,000 on the right hand side of the accounting equation. At this stage, the business will have 18,500 of cash and 1,500 of stock under the head current assets. Let us practice and process accounting equation with couple of business transactions. Transaction number T1 is on your screens. Golu started his business with cash amounting to 300,000. If you analyze this transaction, cash, which is an asset of the business, will increase, and an amount invested by Golu will increase his capital in the business. Therefore, 300,000 increase in cash will be shown on the left hand side and 300,000 an increase in capital on the right hand side of the accounting equation. Please note, cash being an asset is increasing, therefore it will be debited, and the capital is also increasing, it will be credited. T2 transaction on your screens is Golu purchased goods worth 50,000 from Polu for cash. With this transaction, the stock, which is an asset, will increase, and the cash, which is again an asset, will be reduced. And in terms of accounting equation, this transaction will be reflected as appearing on your screens. Stock will increase and the cash will be reduced. Post T2 transaction, the new accounting equation T3 will be 250,000 cash plus 50,000 stock equal to 300,000 of capital. Transaction T4 on your screens is goods costing 20,000 sold to Molu for 30,000. If we analyze this transaction, Molu will increase the debtors as the goods are sold on credit. Therefore, receivables, which is an asset, will increase by 30,000. Stock will be reduced by 20,000 and the capital will increase by 10,000, being the profit earned on the transaction. Post transaction T4, the new accounting equation will have cash 250,000, stock 30,000, receivables 30,000, totaling to 310,000 on left hand side, and an equal amount of 310,000 as capital on the right hand side of the accounting equation. Now let us analyze T6 transaction related to the purchase of furniture worth 7,500 on cash. The effect of this transaction will be number 1 on assets as the furniture is purchased, and number 2 again on assets as the transaction is settled with cash. Therefore, furniture which is an asset will increase by 7,500 and cash which is again an asset will be reduced by 7,500. Now post transaction T6, the new accounting equation will have cash 242,500, stock 30,000, receivables 30,000, furniture 7,500, totaling to the total assets of 310,000 on the left hand side, and we will have the capital of 310,000 on the right hand side of the accounting equation. Please note that the value of accounting equation will change with every business transaction. However, the left hand side will always remain equal to the right hand side of the accounting equation. Question number 50 on your screens is, what will be the effect of the following transactions on the accounting equation? Transaction T1 is, business is started with cash amounting to $65,000. If we analyze this transaction, the cash which is an asset will increase on the left hand side of the accounting equation, and with this transaction business owes $65,000 to its owners, which will increase the capital on the right hand side of the accounting equation. Now T2 transaction is, a bank account is opened with a deposit of $7,500. Now with this transaction, bank balance will increase by $7,500 and the cash balance will be reduced by the same amount. The effect of this transaction will only be on the asset side of the accounting equation, as both cash and bank balance are assets. T3 transaction on your screens is, goods worth $15,500 are bought from the start trading. Value of stock will increase by $15,500, and since the goods are bought on credit, the creditors, that is the liability, will also increase. Post these three transactions, the accounting equation balance will be as shown on your screens. On asset side, we have cash $57,500, stock $15,500, and bank balance of $7,500. And on liability side, we have $65,000 of capital and $15,500 of liabilities. Total of left hand side balance of 80,500 is equal to the right hand side balance of 80,500. Problem solving question number 51 is on your screens. Tuli started his business on 1st of January 23 with a capital of $30,000. On 31st December 23, his assets were $50,000 and liabilities were $10,000. Find out his closing capital and profit earned during the year. Now from the above information, it is clear that the accounting year is from 1st of January 23 to 31st of December 23. Let us first calculate closing capital. To calculate closing capital, let us prepare accounting equation as on 31st December 23, that is at the end of the accounting year 23. We know that the accounting equation is total assets are always equal to the capital and the liabilities of the business. Therefore, closing capital which we need to find out will be equal to the total assets minus total liabilities. Therefore, if from the total assets of $50,000, total liabilities of $10,000 are deducted, we will get the closing capital of $40,000 as at 31st December 23. Now let us calculate the profit during the year. We know that the opening capital plus the profits during the year are always equal to the closing capital. Therefore, profit for the year is equal to the difference between the closing capital and the opening capital. Therefore, if from the closing capital of $40,000 we deduct the opening capital of $30,000, we will get the profit earned during the year, which is $10,000. Problem solving question number 52 is on your screens. Mr. Toley's capital as on 1st January 23 is $60,000. Creditors as at 31st December 23 are $50,000. The revenue for the financial year 23 is $70,000. The expenses for the financial year 23 are $45,000. We need to calculate Mr. Toley's capital as at 31st December 2023. We know that if in the opening capital as at 1st January 23 we add the profit earned during the year 23, we will get the closing capital as at 31st December 23. We know that the opening capital is $60,000. Let us find out the profit for the year to solve this problem. We know that if we deduct the expenses from the revenue, we will get the profit for the year 23. Therefore, when the expenses of $45,000 are deducted from $70,000 of revenue, we will get $25,000 as the profit for the financial year 23. Now, if in the opening capital of $60,000 we add the profit earned during the year, which is $25,000, we will get the closing capital of $85,000. In our upcoming video on 4th January 2025, we will start a new chapter of accounting procedures, rules of debit and credit. In this chapter, we will learn in detail with illustrations the T form of account along with the rules of debit and credit under both traditional classification of accounts and under modern classification of accounts. We will also master the golden rules of debit and credit, followed by question and answer session. If you enjoy the content of my channel and appreciate my teaching style, please like, comment, subscribe and share my channel Accounting Buddy. Don't forget to hit the bell icon so you never miss an update. Thank you and goodbye for now.